Hello everyone, it's Evan here from the Trade Risk on Sunday, December 10th, 2023. Unusual to be recording on a Sunday, but I missed Friday, under the weather, just felt like crap, couldn't hit that record button, but feeling a little bit better, still a little congested, and figured I would do a short video here before we kick off into the new week. So let's get right into it here with TC2000. That's our charting platform we're going to be touring through today, and we're going to start off here just taking a look at the overall performance of the market. It was another sort of bullish week for the stock market. Russell 2000, which is kind of this new emerging theme of rotation, continues to act in a strong capacity here, was leading the charge this week, up 1%. Take a look at the 1 month returns now. Russell 2000, so this is the small cap stocks that are now leading the charge over the past 1 month. So we're seeing a little bit of that rotation and love come into this sector, this area of the market. Meanwhile, you can see volatility continues to come out of this market. The VIX is at 12.35 going into the weekend. Nasdaq vol under 16 going into the weekend. If we take a look at our sector performance here, we had consumer discretionary at the top of the list, up 1.23%. Communication services and tech rounded out the second and third spot. Energy was really the hardest hit this week. It was down 3.28%, followed by materials and staples. So it's a pretty mixed race here. About half the sector's green, half the sector's red. Again, 1 month returns. Most sectors here have enjoyed some pretty strong gains. We talked about it last week where we recapped sort of one of the strongest Novembers, one of the strongest months for the stock market, period, in a very, very long time. So we're coming off of very hot sort of rush frenzy sort of buying spree here in the market. So a little bit of digestion tends to make some sense here after such a strong run. If we look at our custom smart trend filters here, you can see that most sectors are enjoying sort of a rally or a sort of uncontested uptrend. It's really energy which stands alone here in sort of this bear signaling, this downtrend on the daily chart. You can see a little bit of weakening here going on in consumer staples and a little bit in communication services, but generally speaking, pretty good looking charts across the board. That gets us to market breadth here, and one of the things we track closely are these 52-week highs and lows. You can see this ratio is still heading in the right direction as we talk about and look at on a week-to-week basis. The number of stocks hitting 52-week highs and lows, something we care a lot about just to judge the overall health underpinning the market rally. And most of this year, it has been thin, narrow leadership, which I don't think I need to explain again. Most folks clearly understand the 10, 15 stocks that are really carrying the market. Well, you're starting to see that again with that Russell 2000 participation starting to broaden out a little bit. You're seeing 52-week lows dry up. You're seeing more stocks hit 52-week highs. You want to continue to see that ratio to get a little more participation and strength underneath the average stock market hood. So if we take a look here at percentage of stocks over 200 SMA, you can see we're still trending up here. We're up about 58%. And if you look at the percentage of stocks over a 50 SMA, this is all in the NYSE, we're up around 74%. This is kind of where we start to get into this stretch kind of overbought territory. Doesn't mean the market needs to correct. It just means that we've certainly got a strong amount of stocks now above their 50 SMA. So let's give it time to digest and then hopefully carry us higher and lead us higher. If we take a look at IBD's list, so shout out to IBD. They are a sponsor of our show. They make the show possible. This is their IBD 50 list, their classic 50 list. I'm looking at the top 10. And if we look at their top 10 performance this week, you can see pretty positive results here as well. Again, IBD 50 sort of enjoying, I'd say, this broadening breadth as well. You can see a lot of double-digit gains here, and on the 1 month return, some big winners out here as well. So check out their link in the description of this video. Get access to their IBD 50 and a bunch of other cool lists. If we move on to commodities here, so here's the interesting story this week. This is where there was definitely some shakeup and some things that we want to point out this week. Is we had the dollar, which was getting a follow-through week up. So we'll look at that chart in just a moment, but there was up almost 1%, the dollar index, and that put pressure really on everything else. In particular, gold and silver really getting hit hard here. I mean, it was basically a commodities across the board, oil, natural gas continuing their slide lower. But I think gold and silver hit that abrupt sort of breakout kind of failure, which is what we're going to look at in just a minute here. And if we take a look at treasury yields, we can see, generally speaking, a little bit mixed, but mostly higher this week. So still they are in their sort of slide lower ever since breaking down in early November, late October. We do, continue to see kind of this bear trend in treasury yields. We got a little bit of a rebound today. We'll see this week, rather. We'll see if that materializes into a more significant turning point. But for now, looks like we're still in this general sort of downward sloping period. Let's get into the market here. So if we take a look at the S&P 500, you can see we are once again just kind of hitting our head against this 4610, 4605 sort of zone of resistance. This is the approximate July highs that the market topped out in about 5 months ago. You can see we've come really just kind of slingshotting back up to the top end of this range now, up 6 weeks in a row. We are slowing down over the last couple of weeks. If we go to a daily chart, you can see that the S&P 500 is really sort of looking like it's kind of taking its time, kind of chewing through this overhead supply here. It looks actually extremely bullish and pretty healthy pattern here. It really didn't give any sort of correction in price. It mostly has been sort of what I would call correcting through time, which is mostly just sideways, kind of stagnant, overlapping bars here, not really giving back a big pullback, but mostly just kind of consolidating sideways here. We still have all these open gaps, these kind of breakaway gaps back in place that never got filled. And if we start, really kind of clearing through this 4610 area, getting above these July highs, then it looks like some pretty smooth sailing, like we talked about last week, all the way up to about 4735 or so. That's kind of the next big level of sort of contested area that I would look for the market to, kind of test. That's about 2.8% away from current prices, maybe a good year-end target there if this momentum continues. So S&P 500 on this good, clear breakout watch next week. If we take a look at the Nasdaq 100, again, you can see here regaining its footings. It did correct a smidge through time here, but really sort of, did correct itself a smidge through price, but really mild here. I mean, a 2.9% pullback after a, let's call it 14-15% rally. Pretty minor here. Didn't even come in and fill this upper gap here, this breakaway gap. It just got to the kind of the open entrance of it, and then bulls came in, buyers came in, and really sort of defended it. So again, showing some good signs of strength, trying to break out and clear above this July highs, consolidating in this new range here. So let's see if the Qs can clear this area and then make a run for its prior all-time highs back up around 405. Russell 2000, this is, of course, that rotation, that sort of breadth expansion that we're seeing. Small caps really have had a very tough time over the past, call it 2 years, and it just got a big rally off of the lows here. You're seeing some good volume accumulation days on this move up. You can see this week we started up with a nice kind of follow-through week off of Friday's big igniting bar, but we spent the rest of the week kind of going sideways, consolidating through time, and trying to lift back up. So for the Russell 2000, we're trying to get back up to the upper end of this range here. We're still kind of landlocked in between this, call it 165 to 200 Russell 2000, big long-term range. So real no big muscle movements out of this just yet, but we're trying to get that move back up to the top end of the range. And then, if all goes well and this rally really continues into the new year, you can look at a potential breakout of the Russell 2000. Again, not calling for that, not saying it's going to happen, but just keeping an open mind if this rally really does start to defy gravity and see continued rotation. So that is really sort of the big action there in terms of the major markets. I wanted to talk about just a few different markets here, and then we'll sign off. Keep it short today. Gold, I think, is quite interesting because gold had a lot of momentum to the upside. In fact, we talked about it sort of briefly touching new all-time highs, but those highs were not able to sort of be sustained this week. In fact, we got what looks to be a pretty good rejection off of those highs. If we go to the daily chart here of gold, you can see we started the week off with a pretty aggressive gap down on some pretty heavy volume. In fact, one of the heaviest volume sell sessions we've seen going back a couple of years here for gold. So this was very kind of throwing us off of the trajectory, kind of exactly what you don't want to see while something is trying to break out. You don't want to see this range expansion, this high volume range expansion in the opposite direction. Low volume consolidation, right? Low volume pullbacks. Those things are kind of, welcomed in lots of different breakouts and uptrends. But when you start to get big thrusts in the other direction on heavy volume, that's not the classic sign you want to see. So we're going to keep an eye on it. We definitely lost some momentum here for the metals trade. We're looking at sort of a nice kind of blue skies ahead, and this certainly has thrown us off a little bit. So I'd be a little bit more cautious here. Short term, again, all the intermediate term trends are still up for gold, but certainly lost some momentum this week. So we'll see if dip buyers can come in here quickly and try and stabilize this market over, call it 185 or so. If we start, really kind of falling off below 185, I think you have to be a little bit more suspect here in this gold, maybe just longer range bound at best here. Same thing with silver. You can see just a clear kind of fade off of, again, this isn't all-time highs for silver. It's pretty stiff multi-year resistance, though, up around this 2360 area in the SLV ETF. But you just saw some heavy volume selling this week. Weekly chart, again, shows the same 9.5%. Not exactly what you want to see as you start testing significant resistance. So both those metal trades getting some cold water thrown over them. In terms of equity markets, I do want to just highlight semiconductors real quick. Semis here. This one is interesting to me because if we look at the SMH ETF, I mean, this is kind of your big leadership group. It's your AI narrative. It's just a lot of what's been driving this market up. And, we finally saw some consolidation, some pullback here. In fact, I think this looks extremely healthy in this behavior over, the second half of November. But now you can see we're starting to lift up here. We're starting to rally back up. And so I'm just paying attention because we did get bulls kind of put in their little higher low right here. And I just want to make sure it sticks. I want to make sure we don't kind of fade off before breaking out to new highs. If for some reason, again, we see some type of gold-like action or silver-like action where we get a really good kind of thrust or rejection as we reapproach these prior highs, that would be certainly pessimistic. That would be not the greatest outlook here. Again, we are welcome to rotation, and especially if we get more rotation into small caps, we just don't want to see the outright, heavy volume rejection in a fierce type of way. So SMH, keeping it on my radar, and I want to highlight XBI. So XBI is one of the strongest, so we don't typically track biotech as a particular sector. If we go to our strongest and weakest sector grid here, it's our layout that we have on our website available for TC2000 users. But if we sort by the strongest on the week, you can see XBI actually was the strongest performer, up almost 2%. Notice it's one of the biggest drawdowns. It's in still one of the biggest 52-week drawdowns of all the kind of the major spider sectors. So it has been, again, very much beaten up. This kind of fits in what you would call that small cap category. There's a lot of these smaller biotechs in that Russell 2000 universe. We know the Russell 2000 has been getting bid recently. Biotech is very much in this kind of camp, in this rotation trade. Look at the volume that we're seeing uptick here in XBI off of these lows. Something to pay attention to. If this momentum carries and continues and you see more rotation, this is a spot to continue to pay attention. You can see if you look at our layout here, here's the strongest of the XBI names here. So this is sorted from strongest down in returns over the past 5 days. So lots of, in fact, even double-digit returns here just over a 5-day period. So I'll leave it there. Hopefully everybody had a great week trading out there. Sorry I was a little bit late on this week's video, a little bit shorter too. Hopefully be better, feeling better by next Friday. So that's it. As always, leave your thoughts below. Always want to know what you're looking at. Anything I missed, what are you paying attention to into the end of the year? Would love to hear it. Thanks as always for tuning in every weekend. The stock market weekly video goes out, objective market analysis. Check out those links in the description of the video. Take care, and we'll see you back here in the next episode.